Hello friends, welcome to our channel. As you could have read into the title that today we will be discussing about the volatility contraction pattern VCP. It is one of the highly profitable setup, and first thing first, who discovered it? So this was discovered by none other than the US investing champion Mark Minervini. So if you want to learn deeply about this setup, then I would highly recommend you to read this book, Trade Like a Stock Market Wizard by Mark Minervini. So what are the characteristics of this pattern? So let's check it out. So the volatility contraction pattern, now we will call it as a VCP by Mark Minervini. It has few basic characters by which you can identify this pattern. So what exactly this pattern exhibits or this pattern shows is that the stock is into the accumulation phase, and it is being accumulated by the big institutions or investors over the period of time. So in this characteristic, as you can see, there is a point A. The stock is into the uptrend and it corrects to point B. Then again it goes to point C. There again there is a selling pressure over there and it corrects to point D. However, when the stock breaks out after getting support at point D, it continues its upward journey. So let's see an example here. This is National Aluminium stock, and this VCP pattern was developing between April during the April month, and in the May it had its run. So if you could see here, the price had started contracting in the month of April from say 64 to 50, that is 21.75, around roughly 22% or 21% it contracted. Then it again went up. Here if you could see, here it went up till 61 rupees, and there again came a downfall and the price came back to 53 rupees. Then it again tried to go up, and it could go until 60.5 to be precise, and then again there was a supply, so it had to slide further, and it made a low of 55 rupees. Okay, and during this contraction, if you could see, the volumes were substantially low. Okay, here if you could see the volume candles, in the volume candles, as you could see, this white line is nothing but the 50-day moving average of the volume. That means the last 50 days average volume is highlighted or marked by this white line. So usually what we tend to look for is that the volumes are especially during the lower phase, when the stock is contracting or stock is getting a supply, the volume should be below this white line or below the 50 days average volume of that stock. So this way you could see, before the final breakout, the volumes were significantly below the 50-day average volume line, and when on the day of 27th April 2021, when the stock broke out, or you could say closed almost near to its supply zone, we could see there is an blast into volume, or there are huge volumes coming in. That means the buyers are really getting interested into this stock. So I'll just highlight the pivot point. Pivot point is nothing but an area where there is a least resistance. You could expect the least resistance. So this was the pivot point, 60, around 60.5. Yeah, here once this point is crossed, you could see how significantly the volumes also picked up when the price was going up, and here again there was a slight consolidation, but again the stock went up nicely. So again, the benefit of this VCP is that it appreciates your capital in a very rapid fashion. Here is the example of Sonata Software. So again, in case of Sonata Software, the volumes, as you can see, were very, at a lower side. See this, this happened between 13th April 2021 to 26th May 2021. So this was the consolidation period. The stock was in an uptrend, good uptrend was there. Okay, it was a strong uptrend. As you can see, the green line, which is the 50-day moving average, and the red line, which is 20 days moving average, these are also trending upwards. That means there was a strong uptrend into this stock. Now what happened is, in the month of April, there was a slight consolidation. So the price corrected around 13.83, you can say 14% in the first contraction. Then it went up and again contracted from high to low around 7.5%, the second contraction, and the third contraction, which was even lower than the first two contractions, was between 4.5%. So these were three contractions that appeared during the consolidation phase of the stock. And just pay attention to the volumes when the stock was contracting. See, the volumes were really subdued. Like as I said earlier, this is the white line depicts the average 50 days volume into the stock, and the volumes were significantly low during this consolidation phase. However, as soon as the high of previous contraction was taken out, you could see that there was a blast into the volumes. The volumes, there was a huge volume coming in on 26th May 2021, and the stock broke out of its volatility contraction pattern. And as you can see, this stock went up in a very rapid fashion. So this is the benefit of volatility contraction pattern. As I said earlier, it appreciates the capital in a very rapid way. Let's take another example, Grindwell Norton. So in the Grindwell Norton, we could see the volatility contraction pattern appearing between 8th March to 4th May 2021. This was the consolidation phase when this strong fundamental stock Grindwell Norton was consolidating, and as you could see, the volumes were also very down. They were significantly below their 50 days average volume, especially on a day when stock goes down. The volumes were really low. They were significantly below their 50-day average volumes. So here also we could see three contractions appearing, and once the stock broke out of its final contraction here around 950 level, it was a breakout of that volatility contraction on 4th May 2021, and the strong uptrend, which was a major trend into the stock, continued again. So this is how the stock went up. Now, as I said earlier, in the stock market, you always have to trade with your risk in mind. I think I said this in the earlier video, not into this video, but always look into what you are going to risk with each trade. Don't look at profits, so how many profits I will make, or how many how rapidly I can compound my capital. That is your edge, that is a part of trade. Yes, you can, but always look, because your risk is in your hands before you make any buy call or sell call. So this is what there is a loss. There is definitely, there are losses into the stock market, as it is highly unpredictable. But how much you lose, that is all in your hand. Losses are there, but how much you lose, that is into your hand. So here is the example. This stock was, again we identified this volatility contraction pattern into this stock, and see how badly we were hit by the sellers. This was the example of how even the volatility contraction pattern can fail you. But it's part of the business, so no need to worry about, as we had our stop losses set. So as you can see here, there was a contraction into the volatility as the prices were moving from left to right. We could see the contraction, and at this point we decided that we would go long once this high was taken out at 400. Around 400 this high was taken out, and there was a decision to go long here. See what happened after that. The stock, on the very next day, the stock topped out and the prices fell down. We had to book losses here. So this was, as I said in the earlier video, the previous swing low is generally where we put the stop loss. So we had to book this loss at around 360 to 365 level. So this is how you have to manage your risk. If we had not booked these losses, then you can imagine how bad it was going. So it's very important to book your losses when you um, have them, because this is the part of business and not every trade is going to work for you. You have to accept that you have made the mistake and move ahead. So in the current market, we have identified two stocks which are exhibiting these character. One out of those two stocks is this SRHH. So again, this is not a recommendation. I think I'll have to keep it in the original form, because otherwise it would not look well into the screen, onto your screen. So here is the example. The stock is into the uptrend, as you could see. 50-day and 200-day moving averages are going along with each other. Here the stock is making some contractions, 1, 2, and the third contraction. I think this is currently undergoing, after 6th of July, from 8th July, the stock is going under the third contraction, possibly a third contraction. And once this area, that is 455, is taken out and the prices go up above that, there could be a chance to trade this stock on the long side. We will definitely do the paper trading for this. We are also not recommending you to put your own money by looking into our recommendations. It's only for the educational purpose, how to spot these VCPs. Please don't trade or don't invest based on our recommendations. So this is one example. The another example is control prints. So in this case, there is again a very strong uptrend going on in the stock. And look at the volumes when the stock is currently contracting. See the volumes, they are especially below their 50 days average volume, and we would look for 466 level. I think 466 level is a pivot level after which the stock could continue its upward journey. So this is again another example, control print, which is currently undergoing volatility contraction patterns. I hope you enjoyed this educational video, and if you would like us to make any content regarding the stock market, kindly comment or kindly give your feedback on how we should proceed for the next video, what content you are expecting from us. Please like this video, share it with your friends so that they can also grow up into their investing or trading journey. Again, we are repeating, we are not SEBI registered, and please take your own risk. Your profits as well as your losses are not our responsibility. We are just making these educational videos to bring awareness into traders or investors, so that they can trade or invest independently, irrespective of they would not be dependent on the tips and tricks shared by some TV channels or even some traders. Do not trade based on anyone's trick. Just see what is the concept, try to implement them, and manage your risk. Always trade with a stop loss, and if you could protect your capital, you will survive for another battle. If you could not protect your capital and you lose it in single trade or two trades, or for that example in any other way, by not taking the losses early, then you would not survive into this market. Thank you and have a great day.